Welcome everybody to Mackey's Retail Roundup Live. I'm Spencer Israel, Stock Market TV. That's Jeff Mackey from Mackey's Retail Roundup. Jeff, we got so much happening in retail and consumer land. There's tariffs and trade wars, and now there's earnings in the mix. So we have too much to talk about. Maybe
We
we
do.
should just
We do.
maybe we should just start with like high level. Here's a chart of the XRT, the S&P retail ETF. What?
April showers, man. I mean, it's this is a 1 month, and that's not the way stocks are really supposed to move. We're getting pretty close to where we were on April 2nd, right before Liberation Day's kind of placard announcement that didn't go over great. We had bears front half of the month and really kind of building a little momentum here. Like they kind of can't break them. We're hearing what we expected to from the companies that have reported so far, which is the consumers kind of slowing down. No kidding. That seems believable. But the stocks are hanging in. And so, the sentiment's unquestionably improved. I have a new indicator of sentiment just because it's hard to articulate exactly where we are in this marketplace from day to day. The news, yeah, I think the sentiment's relatively bullish in the sense that over the last week, what we've seen is more specifics on what the retailers are going to do, right? Because they were just frozen for a month. Now, they're not great answers, but you're getting into kind of the weeds of, okay, Albertson told their vendors, you guys are eating this. We're not taking the price raises. Go screw yourself. Okay, that's one grocer doing that. Walmart, Target, all the preferred retailers who got to meet with the White House last week, they're suddenly taking in product. Now, not tons of it, but at least kind of these formerly essential retailers for the most part are going to be in business, so that'll ameliorate a little bit of the shelves. It doesn't really solve any of our problems. We don't have a trade deal yet. If we go to our list of three, I don't know what the 90-day pause is. That it's a debatable point. I think that some people would argue there's no pause, and China's still just effectively an embargo at 165%. But we're staggering forward. Like we're going to figure out what we're going to do. It's not super pretty. The risk is kind of concentrated, if you will, in terms of retail. But it's the consumer's alive. Now we just got to see how deep the pullback goes.
Jeff, is it entirely possible that the market is simply forward looking and it foresaw a declining economy and declining consumer and is now foreseeing a recovery, an eventual recovery in both areas? I
You
can't get
know,
this idea out of my head that I saw this chart the other week that the market pretty much always bottoms before the economy, before um, unemployment peaks, right? It's always the
yeah,
first thing to turn. So as you note here with the XRT chart, we've been going steadily higher, and it's not unique to XRT. It's really the whole market. We've been moving steadily higher at this point for it's been 3 weeks, right? 2 or 3 weeks
right,
of
right,
this.
yeah.
So
And you see that first week they're down 15%. Remember that was
right.
the week of just holy crap, relentless. Came in that following Monday, April 8th, I guess it was, and the news flow was terrible. No one really knew what was going to happen. That was about it. Suddenly there were secret meetings going on, and people adjust to the weight. The worst catalyst or the best catalyst, depending on if you're bullish or bearish, you want it to be ambiguous. You want the Fed to be about to cut. By the time they cut, you're screwed. Right? Like it's in this case, the scariest monster on earth was holy crap, we're going to freeze the global economy. But we kind of did that. Turns out, well, but it's never really as bad as you think. Like it's America didn't shut down. It's better than COVID. Now the supply chain isn't really better than COVID. So
Well,
but
that's
at least
that's
we're getting
the
to go
that's the
outside.
weird thing, isn't it? Is we really haven't seen any effects yet at all
No,
of this trade war. No one's life has been impacted as of this moment, the end of April, right? Because it takes
I,
there's a lag.
I've
It
already
takes
done
a
my
while.
holiday shopping. So if that counts as impacting, just because I thought it best to hoard a little bit, hoard some holiday gifts just in case, but no, you're right. Dana Telsey came out with some interesting research today where she was price checking an Abercrombie Target. She's seeing some hikes. She's seeing Barbie dolls
Okay.
are higher. We talked about Hasbro last week. Barbie is a Mattel product. I don't know what the specifics are going on there, but it's you're starting. It's creeping in, and you're going to see empty shelves eventually. That's a really bad visual. Like you super don't want that visual if you're the administration. I think that's kind of you know, the most obvious explanation for why you would go essential retailers. That is absolutely a plan that's going to murder the little guys. But I've got the just kind of the winners. Like this is where people are hiding to the extent they're hiding a little bit in terms of investments, but also these are the companies that really have the best moats fundamentally. But TJ Maxx, Walmart, Costco, they're a zillion pound gorillas. They work in bad economies, and they kind of are somewhere between staple and discretionary. So they can kind of flex either way. It's no one wins if the economy gets just horrendous, but these guys are going to win, and they apparently kind of have their own little special sauce way around this. They're the best capitalized, deepest pockets. They can afford the most pain, and those stocks are just kind of boring.
I'm just taken with this idea that the stock market, at least the U.S. stock market, has it corrected and has recovered, and it did all of that before anybody actually saw any ramifications, before the
Right.
economy even began to drop, right? Before GDP even began to drop, before the ships without goods even made it to American shores, right? Like none
And
of
then
that
it just
has even
becomes like, how the
happened
hell
yet.
did it? Right. It's going to be the stocks will be down like 30% next week. That's the lowest number I've seen. Some people are telling me as much as 60. Like nothing has happened. You're right. It hasn't processed through yet. And so if it keeps going forever, presumably we're going to have to price in something bad again
I
because
no,
we're kind of
no.
just back where we were
The
before.
point that I'm making is the market it just moves so fast.
Yeah. Oh, yeah.
It was so far ahead of everything else, right? That is it possible that the bottom is in? I mean, sure. That's kind of what I'm thinking.
We talked about it last week. This is a super hated rally, just like every bottom in the history of bottoms in Bottomville. It didn't feel like the bottom March of 2009. Boy, did that not feel like the bottom.
Mhm.
That felt like a lot of human misery kind of along the way. When they shut every single department store in the entire country, that didn't feel like a bottom. An incredible buying opportunity. We're just going to start a trade war and maybe put the dollar sovereignty at risk. Doesn't seem like a great reason to buy, but yeah, the market's betting this is going to be another B bottom. Is that just years of conditioning that, that's the Captain Smith and the Titanic just revving things up because there's no way we're hitting those icebergs, not with this technology, baby? Maybe.
Since you bring up the Great Recession, we've been conditioned since then that the market does move faster because that took a long time to find that bottom, right? Dot-com bubble took a long time to find that bottom. But every corrective wave we've had since then, it hasn't. They've been quick,
Yeah,
right?
yeah.
So,
And I was there, man. I was doing TV every
yeah.
night. There'd be this relentless 6.5 hours of just human misery coming down the pipe, and then I'd go on TV and tell people why that happened and that it was probably going to happen again tomorrow. It was a miserable time, but there were huge convincing rallies in the middle of that as well. That October,
Okay,
when
you're
after
absolutely
Lehman
right.
went, the market wanted to own it, right? They were just like, oh, finally Lehman's gone. Those guys, right? That was the problem. Thank God we've gotten rid of Lehman Brothers.
You're right.
Yeah.
Maybe I'm wrong here. We'll have to see. Maybe this is one of those rallies. Let's talk about Amazon for a second. Full disclosure, I really have not. I'm behind on this one, Jeff. I don't really know the story. I know they're in the news, and I know they have earnings on Thursday after the close, but I don't really know what's going on with Amazon and the White House and the trade. I really don't know. So fill me in.
It's a little cringy. We live in just the dumbest damn timeline on earth. So this morning I'm kind of just previewing Amazon, going through it's a complicated company. There's all kinds of things to know about it. Headline comes across that the White House is essentially calling, they're saying that Amazon's a China aligned company, is the expression they use, which they didn't mean it in a good way because Amazon was reportedly going to label their price tags that are going to show how much the tariff was costing, how much of the price was due to tariff hikes. Because that means two things. It means one, they are going to raise prices and they're just figuring out what they're going to do to label it. And two, they're a little bit insane because what that did is provoke the living hell out of the White House, who squashed them. They were holding up pictures of Bezos making collaborative deals with the Chinese in 2017 and saying this was wrong. And I have never seen it. It's Bezos, to his credit, there's a reason he'd want to protect the space because this attacks a lot of what Amazon's doing. Their fastest growing division is third party stuff. Those are mostly kind of Chinese tchotchkes. And Amazon never takes possession of the goods. They don't really do the shipping. It's just, hey, sailor, you want to sell on Amazon. They get a ton of traffic, 65% margins. Amazon's dirty little secret is they don't make a ton of money on retail, but where they do, it's this third party stuff. And that's where Amazon was reportedly, according to this website, going to show how much the tariffs were costing. The White House, apparently Trump called Jeff Bezos and yelled at him or gave him a scolding, or they didn't release the details, but that was definitely the implication. And Amazon backed off it. It's like scald the dogs, man. I mean, it's first they were like, oh, that wasn't really our plan, you know. And then they squashed it immediately. So it's just fun and games. Another day of nothing going on. Amazon opened up down 3%, hung in there all day. They've got earnings coming up. Huge question marks, just that, like all the other companies. But what happens to third party in general? Because the prices are going to go up a lot. That's a lot of Chinese product, and that's going to go up probably 60-70%. And it's a huge chunk of where Amazon's revenue growth on retail comes from. Now, the numbers for in the context of what Amazon earns overall aren't huge, but it's been the growth driver retail for them for years, and that could be changing.
It all depends on your spin. One spin might say, well, it's okay because they've still got AWS. Retail isn't even their whole business. They'll be fine. The other spin is,
right.
Yeah, but if you're not growing, you're shrinking. And Amazon is a company that really depends, at least the stock, really just depends on continued growth forever, right? So
I mean, it's the master of the flywheel, right? It's man, Prime feeds the retail feeds the ad business feed. It all just spins together. And this third party retail, it's 156 billion that's a target and a half. That's a big company that they just kind of as an afterthought there. It's a really, really incredible business model. Takes advantage of everything Amazon does so well, including kind of sell its market space. But again, the prices are going to go up 50%, just like they did for Temu, just like they are for Shine or whatever. They are all pretty much anyone with the super deep Chinese discount. They're not going to have that business for long. That's going away. It's just how you label it. Now, what's that going to do? Well, it's a regressive tax. So people that are needing the cheap goods are immediately punished far and away worse, but it's going to slow the economy as a whole. Just we don't know how much yet.
Or people will just get used to paying higher prices for knockoff goods, right? Which is,
yeah, that's what the discretion and discretionary is. It's not stuff you need. This will be bad for pet costumes on Halloween. Like the prices to dress your bulldog like a bumblebee, which is a popular selection every year, is good. That price is going to be like 150% higher this year. Are people going to pay it? I don't know.
Yeah. To put this into another sense, you can compare these third-party goods. These are it's like the fast food of retail, right, Jeff? Because fast food at $5, $10 a meal, it's a really great value. It might not taste amazing. It's not good for you, but it can't argue with the value. But at $20-$30 a meal, now hold on there. Now we don't have the nutrition value. We don't have the dollar value. So why should I even go and get anything? It's the same idea here, right? The value is the proposition.
I would compare more to like a flea market crossed with a pawn shop. Where it's sort of like, we're not positive where we got this stuff. Yeah, don't hassle us about it. It's just as good as the brand name. It's like you say, it's kind of junk food retail stuff. It's usually kind of super discretionary stuff. Like, do you need a 190 decibel fire alarm for grandma? It's like, sure you do. Why not? Yep. $9.99. All that stuff is going higher. The finger spinner section of the world. This stuff, like you say, it just kind of scratches an itch, but it's not a present that anyone's going to remember for the rest of their life. But a lot of people are using it for kind of lower end dress wear and stuff. A lot of people use it. It's a popular product. It's going to breed huge tax on a big portion of the economy.
All right, what is the deal with this Sachs headline? I'll be honest.
The Sachs thing, this is the have-nots, man. If you're not liquid right now, Sachs last year, they bought Neiman Marcus for like $2.6 billion in like December of last year, which was hilarious in a couple fronts because there isn't a person in retail-dom on earth who doesn't know that kind of rolling up department stores and slathering a bunch of debt on them is not just a death trap. So we all knew this was going to go pear shaped, just not quite this fast. Sachs came out this week and said, you know what? We're thinking about raising 350 million because yeah, things are a little illiquid right now. They took it out. They did the conference call, and every analyst is sitting on that call thinking, who's gonna, where are you gonna get the product? What are you gonna do with 350 million? Can you even buy product? Where's half your, Sachs has no idea what the cost impact of all this stuff's gonna be. The high-end consumer is gonna be crushed or pinched at some point for sure. Everyone except like the top teeny tiny richest people on earth, they're already starting to pull back. So, it's the terms for Saks and any other retailer that's out there trying to raise money. Kohl's, I'm still looking at you. I don't give a shit. That got squeezed a little bit, but they're going to have to raise money. The have-nots are in such a deep pile of, they're in the weeds. They've got a real problem. And this is where you're going to see the biggest burn, because this is kind of the small retailers, the non-public, the levered up PE names, anyone that is just running that margin razor thin and needs financing anytime soon is getting marked down. And part of what you're seeing, at least in terms of, we've talking before about the market looking past this event and seeing a good outcome, you're seeing a nice comeback in a lot of those companies that really aren't that distressed. But they do everything, with the market when it reacts fast, the correlation goes to 1, everything goes lower. Now you're starting to see a little distinction between the players. Peloton, which reports not this Friday, but next week, as it turns out, they're one of the names. We're seeing great action in that. I still like Stitch Fix here. This is bad. It's not the worst thing in the history of the world. At least that's where the money's going now.
This is the beauty of private equity and private markets right here, Jeff, is, you're talking about death spiral financing for Saks, but there's no price transparency on this, right? So it's really it's really whoever, if they can find a buyer, then great. You know what I mean?
They'll stick it to whoever. I know
right.
but man, this is a tough time to go to your bank. I mean, you literally don't know if you can get inventory.
Sure.
Yeah, maybe we're still making fine dresses. I'm not positive. We have no idea. We're delaying our orders, and kind of that's why I just wanted to do and explain. People, they come up to me on the street, Spencer, and they want to talk about stuff. Sure. And they're worried. I got a call from my mom. She wants to know if she's going to buy holiday gifts. She needs to buy Christmas yet. As you're flashing your screen, you're getting nervous. We're still like 3 weeks away. It's going to be May before we have empty shelves. But it is going to happen because shipments are going way down, and so that can only resolve itself with empty shelves or no demand. Or that's kind of the only way it goes. If you're not taking in new product, if you're selling anything, your shelves are going to be empty. We're about 3 weeks away from that happening. It looks like the administration, based on kind of what we're seeing with the Amazon and the big hulking winners, are trying to avoid the optics of that. But that's going to send prices up. Spending got pulled forward. That's why we're seeing, April data is pretty good. It's already starting to roll over, and it's going to get worse. And where that's going to hurt is, the employment picture is going to get worse. Is it priced in? People should know it. They're reacting okay to kind of the companies pulling guidance and stuff. So the market's looking past it a little bit, but it's not good. Struggling retailers still frozen. That's got to change, and that's why we want our little free wish list to expand a little bit. And it's right now really the fight. Again, we're setting terms for the way we're going to do business. And so the fight now is, okay, who's going to eat it? The retailers, for the most part, if they're able to get supply, it's going to be a 15% tariff. We'll split it with you. We'll go Dutch. We're going to, stick a little back to the vendor. We're going to take a little ourselves, and we're going to raise prices. And it might not be one for one. You might not raise price on your Mattel item that came from China all that much, but you spread it throughout the store. You kind of sprinkle it in there and hope no one notices.
Jeff, I admit I had you in my head yesterday. I decided, you know what? I should probably get ahead of this thing. There's a couple things that, I'm preparing for a baby. There's a couple things we don't have yet. And I thought, you know what? There are things that we're not going to need for a few months, but we should get them anyway. So we went and we bought a crib. We don't even need a crib for like 6 months, right? Doesn't matter. Went ahead and pulled the trigger. I thought we should probably stock up on diapers just because there are things that if you don't have, you can live without, and there are other things if you don't have it, you're screwed. Right, you're screwed.
I'm a two-time parent, Spencer, and that's exactly right. They come home with a tiny instruction manual. You're going to want diapers. That's
But
good advice.
right, I
And
mean,
and a
this
crib.
is the difference between discretionary and staples. But there is no difference between discretionary and staples on the supply chain, right? You're at the mercy of in this case geopolitics, right? I remember there was that baby formula shortage last year or the year before. Didn't affect me. Well, it might now if it happens again. So I'm trying to get ahead of that. So I had you in my head as I was placing orders on Amazon yesterday for all these things that I don't even need them yet. But I thought better to get them now than not have them when I need them in 6 months, right? So
That's just good parenting. And what's it cost you? A little space in the garage while you wait to assemble
right,
the crib.
that's
And
right.
congratulations, by the way, that's a wonderful thing.
Thank you.
That's why that's exhibit A of what's happening with all the stuff that you see, the mumbo jumbo with the headlines. The April sales, great. The slowdown is completely real. It's you're just getting thrown at stuff, and right now, it's the headlines kind of follow the price way too much. And so every time you get a down day, it's going to be pegged to,
That's right.
consumer this, debt reading that. And usually it's just crap. For the most part, nobody knows anything. There's not really any breaking news in terms of a deal being announced. You know, geez, for
Okay.
3 weeks and they're
Okay.
waiting for that.
So this chart is great. I was saying how nothing has happened yet. That's not quite true. Something has happened, and that is consumer confidence has fallen off a cliff. That's probably the only real ramification aside from you're saying maybe there's some slight price hikes in certain places. But the only real ramification so far, besides the market pricing in whatever this is a collapse in consumer confidence. People are expecting things to get worse. How long it takes for that to happen, the degree to which that does happen is, of course, we don't know yet. But this is the only thing really, the only I guess you can call it soft data, right? That shows that people are preparing for the worst.
Right. But this is also something that we've been talking about this for 3 weeks, not just us, but kind of everyone. It as intended was creating a little bit of controversy with this idea. And so, people know this by now, like confidence failing right now. If you are still super confident in what the next 3 months look like, you're totally not paying attention, which may or may not be an okay thing, but you've done congratulations on avoiding any media whatsoever if you're feeling super confident right now,
Yep.
because we just kind of seem to be toying with a trade war with China, which isn't even a sentence that would have made all that much sense, except for sort of an extreme type of political, more related podcast. But right now, we're just dealing with the stuff freezing. Jeff Bezos is nervous, man. If he's taking Trump's calls and buckling immediately, what are you and I supposed to do? Be careful.
Yeah, I think there is pretty much. I mean, just personally, I think the survey. First off, surveys are mostly bunk anyway. The survey is obviously in the extreme at this point. I think we're all, and when I say we all, I mean pretty much everyone that follows the stuff is in agreement that things are going to get worse in the near term. What no one agrees on is how long that lasts, and again, like I said, the severity of that. And I'm still kind of kicking around this idea in my head, Jeff, that the market is so far ahead that they've already priced in the eventual recovery. Right? That's how
When a
ahead.
good time to
That's
buy
how
was,
ahead it
Spencer?
is.
May 2020 was a hell of a time to buy stocks. And that's, we haven't seen confidence this low
That's
since May
exactly
2020.
right. That's exactly right.
History doesn't rhyme, it doesn't repeat, but it rhymes. So this kind of has similar syncopation of past sell-offs, but whether or not we're at the bottom, we're going to get a wave of bad news. That seems to be priced in. Everybody seems to be all braced for it and ready for it to happen. And, if that goes on through Christmas, we've got maybe a month and a half, 2 months before you're really starting to have to lock down at least a preliminary type of Christmas orders. And man, the third and fourth quarter aren't what they used to be in terms of spending. It's more spread out than it used to be, but they still matter. Back to school still counts, but that cranks straight into Christmas. And if you cancel Christmas, I don't know that that's priced in.
Ooh. Good thought there. All right, let's leave it there. Guys, if you want to get Jeff Mackey's free emails and his content and his blog, the link to sign up is in the description. That's Mackey's Retail Report. If you want to actually find out what he's buying and selling, see his portfolio, that's Mackey's Retail Roundup. That Jeff is adding a new stock to his portfolio this week. If he hasn't already, he'll talk about
It's
that.
done, baby. It's done.
It's
It's a
done.
joyous day.
All right.
That's the smoke is coming up from my pyre, just like the Vatican right now. We've got a stock.
All right, Jeff is going to talk about what that new name is to his members on Thursday, or Friday. And Jeff, actually, speaking of that, I think we are going to go live. I think you and I should probably go live on Thursday after the close. Talk about these earnings as they come in. We have Apple, we have Amazon, like I said. So I think we'll do that on Thursday. But for members, they'll find out what Jeff was buying this week. And other than that, we'll see you guys around. So thank you for watching, Jeff.
Yeah, we'll see
As
you on
always,
Thursday. Tune
a
in, man. That's
pleasure.
going to be cooking. Amazon's earnings are going to be cooking with gas, and they got a lot of talking to do beyond just apologizing to the White House for the first 30 bullet points of their earnings release.
We'll find out. We'll see you there.